Everything is dropping on CPI numbers.
We're still falling!
And in this video, we're going to talk about whether or not the commitment of traders data actually leaked the outcome early.
I'm the spy.
Which might be an interesting thing to stay tuned for. Did COT predict this? Also, we're going to take a look at the numbers themselves and see how this actually impacts markets. What setups can we actually look for following this really hot CPI print? We're going to dive into that and much more in today's video. Let's get started. The COT data signaled something really interesting prior to this week. We saw two notable charts that I want to point out to you. First of all, US dollar had a tick increase. So they got bullish USD. What I'm talking about, the notorious they, is institutional money that reported on the commitment of traders data prior to this week got bullish on the US dollar. They actually added a lot of long contracts and barely added a little bit of short contracts, but for the most part, it was a big net bullish change in sentiment. Institutional traders also sold heavily the NASDAQ, a net 2.5% decrease in positioning. Look at this, they added a bunch of short contracts and they decreased the number of long contracts. You can't make this stuff up because this was right before we saw an absolute drop off in the markets with today's CPI number. Did they know something ahead of time with the COT data that came out? Something to think about. And again, just to put a chart with our data that we just discussed, here's the NASDAQ today, which has dropped over 1.5% in a single day following this CPI number. And by the way, it sold off yesterday too. So we're seeing a pretty big sizable sell in the NASDAQ and other areas of the stock market. And yet the COT data said that institutional money sold it after the recent big pump up. Very, very intriguing to keep an eye on what that COT data is telling us. By the way, I should make you aware that currently we are doing a 35% off on our software, the A1 Edge Finder. We build tools for traders to allow them to look through data much quicker, much easier, and to find ideas like this before they happen. So if you don't have a copy of the Edge Finder and you'd like to take advantage of that discount, the very first link in the description will connect you to a real person on my team who can get you that 35% off the Edge Finder before it ends. That saves you hundreds and hundreds of dollars on the tool. So if you're thinking about it, take advantage, click that link and chat with someone on our team. And have a look here this morning at everything just absolutely rolling over. Here's the S&P 500, the NASDAQ, and the Dow, all seeing some crazy volatility, while the dollar index is the only one really spiking hard here this morning. The pound and the euro sold off, and gold also continues to test that 2000 level when we were just trading in the 2030s and 40s recently. Crazy to see such a big drop off on gold, and we will get to that one for those of you guys who watch it. I know a lot of my viewers love to trade gold and are wondering what's going on with that market right now. And here's the dollar chart. You can see we are bouncing very nicely off of this level of support. And if you've been watching the videos recently, before this event, I candidly said that if we got a real soft print on inflation, that I would actually look to get more bearish on the dollar. But as it stood, I continue and was bullish on the dollar. I think that we have a good chance to see a move up to 106 in the coming days and weeks, and we'll continue to watch that close. But again, this stays intact. We've seen a lot of strong economic data, and today is the icing on the cake. Speaking of it, let's take a look at the CPI numbers. All right, and here's a look at the numbers that we saw this morning. Pretty much everything green. And what does that indicate? Well, it indicates dollar strength because the core CPI came out at 0.4% month over month. That was a stronger than expected reading month over month also. And of course, the year over year print, that's what's on everybody's mind, 3.1%. By the way, they were expecting 2.9%. You could see the forecast here was 2.9. We got 3.1, showing that inflation might just be a bit more sticky than people thought. What does that do to the rate cut story? Well, it throws cold water all over it. I like to reference that scene from the Pirates of the Caribbean movie when the guy gets water splashed on him when he's sleeping with the pigs.
Curse you for breathing, you slut-jawed idiot!
Yeah, that's pretty much what happened here today because the inflation print came out hotter than expected and really woke everybody up, if you will. Now, granted, here's a look at the stock market. You can see S&P 500 is coming down hard on this news here today, but we're still really, really strong overall. And I do like this idea of potentially getting in on a pullback. I'll be watching this market. Same thing with the NASDAQ, which I've talked about in recent videos. I'm looking for a possible setup here. And if I do take that trade, I'll share it inside of the signals room. I'm watching NASDAQ, S&P. maybe even the Dow, but look at the Russell getting crushed today, as this is a more interest rate sensitive area of the market. These are smaller companies that rely more on debt, have less cash reserves, and have less leverages that they can pull to sort of help themselves in a higher interest rate environment. So this market taking a beating here today. Gold is also taking a beating. Look at this. We are back under 2,000 an ounce. And this ends the longest streak of history, in which case gold stayed above $2,000 an ounce. And I've pointed this out on my stream here today that, you know, if we do continue to see selling here, I think a good chance we see a retest of the lows here, which preceded Jerome Powell's sort of dovish turn of events where he kind of said, hey, we're expecting rate cuts this year. Well, we are still expecting rate cuts, but the idea of more rate cuts than the Fed indicated is getting pushed back on. We're seeing economic data prints, strong NFP, and I'll show you some of that real quick now. So the two big obvious ones were CPI today, which we just got done covering, was hotter than expected, but jobs were hotter than expected too. Check this out. The blue bar here is 353,000 jobs that were added in January's number, which was reported on February 2nd. The yellow line represents revisions to the previous December number, which were revised higher. So jobs data is just strong. You have PMI data that has rebounded. I'll show you that here now. Here's PMI data, manufacturing and services both ticking higher. The point is, guys, we've been dollar bullish, we remain dollar bullish because the story for it makes sense. Fundamentals don't lie. They make a lot of sense when you understand them fully. The economic reads are strong. We continue to monitor that using the help of our handy dandy edge finder, and we continue to make money because we've ridden this. Speaking of making money, I'll show you the trade I've got on. So I shorted the euro a day or so ago, and here we are currently still in the position. I've just trailed stops here, just tighter a little bit. The initial trade had a bigger stop loss, but I've tightened it. I took this trade off the daily chart, thinking that, again, I think we could continue to see dollar strength. And by the way, this also was on our top setups algorithm. You can see here is, well, it just disappeared, but Euro USD was printing a bearish read you know, in the last few days, which helped me to pick up that trade. So continuing to watch this as the CPI number came in strong, that helped out our trade quite a bit. Here's the trade alert that was shared, by the way. I share all of my trades when I take them and why I'm taking them. So if you're not already in the Discord, you'd like to join that, we'll leave a link down below in the description, the very first link that will allow you to connect with a person on our team to ask about joining this service. It is a paid service, but if you're somebody who's taking this stuff seriously, you want to trade alongside myself and my team, Frank and Ivan also share their trades, you can get all those information sent directly to your Discord on your phone or your desktop by joining the group. Again, first link in the description. Going back to the top setups algorithm really quick, this is currently what we've got. We've got pound Aussie, the DAX, pound New Zealand, Euro Aussie, dollar ZAR, dollar Swiss, Euro Swiss. And what I like to see here, by the way, is that a lot of the dollar stuff, let's actually filter really quick. I'm going to go to category and I'm going to just select major currency pairs. Dollar bullishness is like reigning supreme, right? Dollar yen, dollar Swiss bullish, Kiwi dollar, Aussie dollar bearish, obviously in favor of the USD. And I thought that was really interesting to get out of today's number. Of course, if you trade other things, if you trade like indices, etc., you can also pull these up. And if you want to, what I like to do is I like to remove the neutral reads, but you can add them as well. You can see we track like 35 plus different currency pairs, assets. We got gold on there, so sometimes you get gold readings, etc. And by the way, these readings are taking into account all sorts of economic data, which we keep talking about, like interest rates, labor stats, inflation, like today, CPI, economic reads, PMIs, retail sales. All these numbers are being factored in and generating bullish and bearish readings automatically for users. If you don't have a copy, pick one up by clicking the link down below in the description. Remember, our 35% off sale ends very soon. And the Fed Watch tool is telling an interesting story here today. Check this out. So May now has a 57%, let's call it, chance of rates not getting cut. And remember, we've been talking about this for weeks. It's been very different where we, at one point, we're expecting like 70% chance that we'd rate cut in March. Look at this, 91.5% chance that we hold rates steady in March. So March is almost off the table completely. May is now more, even looking like we're not going to cut then either. So then the question is it going to happen in June? Well, take a look at June. we're still expecting, a mixed bag of whether we cut interest rates by then or not. But it does seem like we probably very slightly will see rate cuts by June. That's at least what the market thinks for now. We'll continue to monitor the data to see how this changes over time. For the rest of this week, we do have plenty of market data coming out, and things like retail sales and PPI numbers on Friday. Both will be very, very market moving. We will be live streaming for those events. Though just to let you guys know, I will be out of town. I'm going on a ski trip in Colorado with the wife and some friends, which will be really fun. But I'm leaving you in good company. We've got some of the team. Ivan, I think, is going to step on. We're going to have Kenzo, who's going to take over the live streams and actually give you guys that coverage. So make sure to still tune in when those events happen. Thank you very much for watching, and have a great rest of your day. If you're someone who watches my channel and you're from outside of the US, I want to tell you quickly about our top broker partner here on the channel, Eightcap. Eightcap is regulated by ASIC and SCB, and through TradingView, you can actually trade directly with your Eightcap account. They also offer very competitive spreads and commissions. They have a wonderful support system and team, and you can trade anything from Forex pairs, commodities, indices, and even some select stocks. Check out Eightcap using the link down below in the description, and there are some special sign-up perks if you use that link down below again in the description. Thanks for watching.